Hello everyone. This is the pre-market report video for today, 5th September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. As most of us know, because of the GST Council reform yesterday, Nifty opened 260 points gap up. Just 20 points below 25,000 mark. But throughout the session, gradually it continued to slide and closed just 20 points above the Wednesday closing. Part of the reason it's just weakness in Reliance Industries and IT stocks. We know in the GST reform, for the most product cases, if the product is in current 12% bracket means, then from September 22 onwards, it will be on 5% or no GST slab. Whereas the current 28% bracket GST product dropped to either 18% or to the 5%. So 90% of the product were tax rate changing under this GST reform or the reduction. But that's not the case for the oil related products. Yesterday Indian government said oil and gas production, oil and gas exploration and oil and gas pipeline service, all oil related production and services will move from the current 12% tax slab to higher 18% tax slab in the future. So we can say no petrol diesel price cut. And because of this negative influence, yesterday including Reliance, the whole energy sector was under pressure, down over 1%, and as expected, Reliance is the biggest Nifty dragger. About IT stocks, it's just US tariff related growth volatility and rate cut uncertainty, which in turn made the sector to drop near 1%. As a whole, 6 out of 16 major sectors managed to stay positive. Auto and consumption sectors were the gainers. On the other hand, along with the IT and energy sectors, defense and PSU banks were the major draggers. Overall, the advanced return ratio was roughly 1:2. Roughly for every one listed stocks closed positive yesterday, actually twice the number of listed stocks declined and closed negative. Hence, yesterday only the major index managed to stay on the very mild positive side, whereas majority of the market was under pressure. About institution, in the cash market, after a long time, FII net sold little quantity like only 100 crore rupees and DA net bought for 2250 crore rupees. So those were the quick takeaway from the yesterday's market. Then moving to US market, before their market opening, private payroll processing company ADP released their non-farm employment addition data for August month, which came as very low, only 54,000 new jobs added. In comparison, on July month, over 1 lakh jobs were added, which is roughly only half of the penultimate month addition. So it's a very bad macro data. Similarly, the weekly jobs new insurance claims also increased more than the expectation as well as the previous week. All this poor jobs and weak macro increases the September 17 FOMC meeting interest rate cut probability to above 96%. Which in turn made the S&P 500 to reach and close at the new all-time high value above 6,500 mark. Then the other index, Dow Jones, increased 0.77%, and because of rate cut optimism, Nasdaq outperformed all and increased near 1%. In case of VIX, it dropped 6.5% and moved to 15.3 from 16.3. Then about oil, same story as yesterday. In the upcoming week, OPEC plus countries meeting is due to decide about the oil production output increase for October month, which in turn reduced the oil price further by 1%. At the time of this video, WTI crude trading at $63 per barrel and Brent crude trading near $67 per barrel. Regarding Indian ADR, as it is, both the IT stocks closed negative and both the banking stocks managed to close positive. However, yesterday in the Indian market, both the IT stocks closed furthermore negative, like Infosys was down 1.2% and Wipro was down near 1.7%. So, because last night ADR was not that negative, while calculating the arbitrage, it's showing the potential positive difference. Whereas on the other hand, in Indian market, yesterday both the banks closed significantly positive than the ADRs. Hence, despite closing positive, banking ADR showing potential negative arbitrage difference. In short, IT stocks looks okay, banks not. in line with the US market positivity and IT stocks ADR positive arbitrage. Early morning today, GIFT Nifty traded at 24,889. Equating that with the spot market, it's indicating the gap up opening of 60 to 80 points. Just for info, at present, the premium to spot market increased to healthy 120 points. So, no red flag here. Then, moving to India related info. Yesterday too, our Commerce Minister Piyush Goyal gave an interview and he said the trade negotiation between India and US is ongoing. But he agreed the relationship with US having a blip like 1998 when US sanctioned India. However, he believes this will also pass on like 1998 and it won't affect the long-term relationship kind of. In addition, he also mentioned that disagreement with China is largely resolved now. Then in the European side, yesterday European Union Commander-in-Chief Ursula von der Leyen and Modi had the telephonic conversation and they pledged to complete the free trade deal agreement between European Union and India by this coming December month. So politically it seems okay and improvement, but is it enough to prevent the FII from their continuous selling or to turn the market positive? Don't know, only time has to say. Then second, in their filing to SEBI, Japan's SoftBank Group said that they reduced the Ola Electric shareholding from 17.8% to 15.6%, meaning over the 2 months period they roughly sold 2.1% of the Ola Electric shares. Hence we could say Ola Electric will be on focus today. Then third, I don't know its influence. Yesterday, Maruti Suzuki chairman said that due to the recent GST reform, he expects the auto sector to grow by 7% annually. I mean, Maruti and auto sector share price already increased significantly. So not sure about its influence, but it's good to know as it gives us an idea of what to expect in the next quarter from Maruti's sales perspective. As a summary, global momentum is improved now and global market are already starting to factor the 25 basis points rate cut on September 17th. In line with that, Indian ADR and GIFT Nifty indicating the gap up opening. Then moving to the index options, yesterday 42% new call options and 4% new put option open interest were added and hence the PCR ratio dropped from 1.16 to 0.85. Then if we see the stance wise, from neutral, proprietary traders again turned negative. At present they are holding near net 5% of their open interest on the bearish side. Similarly, FII having net 8% of their open interest on the negative side. On the other hand, retail traders or client having net 13.7% of their open interest on the bullish side. In short, FII and proprietary traders position signaling that they are expecting a breakout on the downside, whereas client or retail traders expecting the breakout on the upside. Moving on, as per stock open interest, HDFC Life Insurance, Godrej Properties, LIC Insurance, VBL, Bajaj Auto, MFSL and BHEL are some of the 87 stocks that got an increased open interest along with a negative close indicates the short build up. On the other hand, Dauber, Britannia, D-Mart, Eicher Motors, Polycab and M&M are some of the 15 stocks that got an increased open interest with a positive price close, which means these stocks got the long build up. Then about the things to look out, early morning Japan's household spending and wage income growth rate for July month is due. Then during our market time at 11:30 am, Germany's factory orders for July month and then at 2:30 pm, Europe's GDP data are still released. Whereas in the aftermarket hours for US, average hourly wage increase, unemployment rate and government official non-farm payroll jobs data are some of the important items we need to keep an eye out today. Coming to technical, as we discussed earlier, Nifty opened near 300 points gap up, but it could not sustain those gains for long. Technically, it had a profit booking as the day progressed, then eventually closed at near 24,730. Thus, on the daily chart, Nifty formed a long bearish candle resembling bearish belt hold and bearish meeting line kind of candlestick pattern, both indicating a potential bearish reversal. In addition, Nifty also traded below 50-day exponential moving average and close to 20-day exponential moving average. However, on the positive side, it still held above the midline of the Bollinger Band and 100-day exponential moving average with RSI and MACD both showing positive crossover. Hence, as an overall, Nifty managed to defend 24,700, which is now expected to act as the immediate support. Below then it's 24,500 to 24,400 zone. Whereas on the higher side, 25,000 is likely to be the key decider zone for upward journey towards 25,500. In case of Bank Nifty, it also opened around 300 points gap up but closed around 54,000 mark. Thus on the daily chart, Bank Nifty formed a bearish candle with minor upper and lower shadow. In addition, it sustained below 20, 50 and 100 exponential average but continued to trade well above 200 exponential average, 53,587. Furthermore, Bank Nifty tested 38.2% Fibonacci retracement, 54,400 from April low to July high but could not sustain above it. In terms of momentum indicators, RSI at 37.28 remained below the signal line and MACD also sustained the negative crossover. Hence, going forward, the zone of 54,400 to 54,500 will act as the immediate hurdle. On the downside, 53,700 to 53,600 zone will act as the crucial support area. And if Bank Nifty slips below 53,600 level, then the next crucial support is placed at 53,200. Regarding the options front, the maximum call option openers was at 25,000 strike, followed by 24,900 and 25,500 with maximum new call option writing at the same levels. On the put side, the maximum openers was at 24,500 strike, followed by 24,000 and 24,600 with maximum new put option writing at 24,800 strike and then 24,000 and 24,900. Thus, from options data, it suggests that 24,900 to 25,000 range is expected to act as the resistance zone with support at 24,500 and 24,600 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me build the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.